KC Mathews, it's a big day for politics. So let's talk stocks in the election. So tell me, how does the market generally do in election years?
Typically in an election year, you see a very choppy first half due to the uncertainty in the market, multiple candidates talking about an array of issues. And then as the field thins and you understand who the nominee will be, perhaps midsummer, then all of a sudden the market behaves much better and you see a robust market in the second half of the year.
All right, so do you expect this year to be any different? Because so far it's playing to form. It's been volatile so far.
Exactly. It's following the exact pattern so far in the first 2.5 months of the year. Negative trend in the market, a lot of choppiness, and today we'll see the field thin perhaps, and I think the market will start to behave better.
What about political rhetoric on the campaign trail? Should we listen to the candidates as investors when they're attacking Big Pharma or Wall Street or whatever they're attacking?
Well, that's a good question because the issue is, remember that candidates today are talking about issues to excite the voter base, to get people's attention, to get an advantage over the next guy, if you will. So those issues may not make it to the White House agenda. First, once they win the nominee, then they have to change their posture a bit to win the general election. And then once they get to the White House, those issues may no longer be on the docket, or they might have trouble getting through Congress. So some of this short-term rhetoric, I believe, is nothing more than noise in the marketplace.
All right, so Democrat or Republican, as an investor, over that 4-year stretch when they're in office, who should I be rooting for?
Well, when you look at the raw data, it tells us that typically a Democrat in the White House produces the best rates of return in the market. Going back to 1900, you see a return about 8%. Republicans, about 3%. The challenge with that is I believe you have to dig deeper. The numbers are skewed to some degree due to two significant economic events, the Depression and the Great Recession. Both events started with a Republican president and ended with a Democrat president. So the numbers are the numbers, but I believe they're skewed a bit.
What about a divided government? Should we root for that, a Republican in the White House and a Democratic Congress, or vice versa?
Again, you see better returns when you have the division of power. So I believe a divided power is beneficial for the markets because the checks and balances work.
All right, so put it all together for me. What should investors be doing or rooting for on this Super Tuesday?
Well, I don't know if they should be rooting for anything, but the good news is as the field thins, you reduce the uncertainty in the marketplace. Markets do not like uncertainty, so I think you'll see a better performing market. And the way I'll answer the question is, I believe we need a candidate that will address tough issues like immigration reform, like tax reform, but at the same time, bring politicians together to meet in the middle and get things done for the sake of our economy.
All right, well, thanks a lot, KC Mathews.
Thank you.
Thank you for watching The Street.